Peter McGuire. He's the Chief Executive Officer with XM Australia, and David Lennox, the research analyst at Fat Profits. They both join us on the show. Thanks to both of you for joining in. Good evening to David, and good afternoon to Peter, who joins in from London. David, I'm going to pose my first question to you. While a lot of questions and a lot of reasons, rather, have been attributed to the fall in crude, right from economic slowdown to comments from Donald Trump, what, according to you, is leading to this swift drift down in crude?
Have a look at what's happened in the markets over the last few weeks. We've seen obviously quite a deal of information regarding the demand side, and that is that traders are now believing that in 2019 we're likely to have a weaker outlook for global growth, and with that weaker demand for oil. So that's put somewhat of a slide under the oil price. And of course, we're now in the midst of getting closer and closer to the October meeting, when OPEC will decide what's going to happen in 2019. Not many weeks ago, we had Russia and the Saudis suggesting that they were looking to cut production. Now it would seem that Russia's come out and suggested that there won't be production cuts. So the markets have really been quite confused by the rhetoric. And in that confusion, we've basically gone back to the demand side and said, all right, demand weak in 2019, and we've now seen the oil prices react accordingly.
All right, let me also bring on board Peter then. And Peter, you know, we have been talking about the three men that matter in the crude markets. Of course, Saudi Arabia, it's Russia, and also now Donald Trump. We did have statements coming in from Donald Trump that caused perhaps crude to plummet the way it did. At least that's maybe one of the reasons for this drastic fall. Do you believe that Donald Trump, by lending his support to Saudi, is essentially softly bullying the country into withdrawing its support for crude output cuts come December when the OPEC meets?
Well, I think a couple of things. First off, when you take on board the mechanics behind Donald Trump's, or the President Trump's comments going back to the early parts of October, you need to take on board that I suppose the rhetoric was very much geared to the midterms and what the impact was having as far as high crude prices and, of course, a strong US dollar. And that was greatly impacting his economic position. So in turn, he's gone on the front foot in typical Trump style to say that crude is overpriced. That's taken, you know, the market by storm, and certainly you had the Khashoggi issues as well. So he's been fortunate in some ways from a geopolitical to keep pressure on Saudis, and in turn the prices collapse. We've seen that big fall to the downside. I think there's probably further push down from here. And the other side, you need to be conscious also, you know, where Russia sits with all of this as well. So yes, I feel in a lot of ways the catalyst to start things off was certainly President Trump and his comments going back the best part of over a month ago.
So there is some correlation with the fact that there were the midterm elections, etc., that, you know, Mr. Trump did have to keep in mind. My next question to you, Peter, is that what about the inventory levels? I mean, we have seen it ballooning week after week in the United States, 8 consecutive weeks that we have seen crude inventories only go higher. Is that pointing to perhaps also the, in general, slowdown in demand, which may be the reason why these inventories are building up and thus concomitantly the fall in crude?
Well, we've got to understand, in putting our minds to a couple of years ago, America was a player in the crude market. Now it's an elephant in the room. Their production is just, you know, hitting the ball out of the park, and they're certainly not to be taken lightly on the world stage. You know, going back to 2013, 2012 or earlier, they weren't really, they were a player certainly, but they weren't a monster player. And now with the shale revolution and what they've been able to retrieve from the fields and, of course, from you know, that side of the market, it's been a wonderful boon for them. And of course, with crude prices the way they are, their retrieval costs are about $40 a barrel, and they're being paid in a very strong US dollar. So it's been wonderful for their economy, wonderful for, you know, the domestic side of it. And from an exporting side, it's been beneficial also. So the president is conscious as far as, you know, what impact it has as far as higher input costs or energy costs on a you know, to the man in the street, the woman in the street, and of course, you know, to the general economy from everyone involved. So yes, I think that the US has to be taken very seriously, and from, you know, that's inventories, it's not unusual. You know, you've just got those huge numbers as far as production, and that's the byproduct of it.
Oh, that's an interesting perspective. And yes, US has started to matter in the larger scheme of things when it comes to crude markets. David, we usually get bullish and talk about supply shortage and stuff like that when crude was at $85. That's what the rhetoric was. And now when we're at $65, we're talking about overcapacity.
Well, certainly in the oil market, it tends to be the fact that production is concentrated in some big hands. That does mean that when those big hands start to make rhetoric noises about production cuts, that the market very quickly stands up and listens. As I said, we've seen some disparate noises now, or rhetoric coming out of both Saudis and the Russians regarding production. So when we see that happening, the traders tend to then focus back to the old-fashioned demand and supply equation, and with that we expected demand to be weak. And really, that's what's now running the prices at the moment. Look, the December OPEC meeting's not far away now. If we can see a comprehensive and coherent announcement from OPEC and Russia regarding production, either up or down, then that will give the market some certainty, and we'll see the prices perhaps, if we get production cuts, certainly rising. But if the production increases, then we're going to see the continuation of weak prices. So the OPEC meeting in a couple of weeks' time is a key to what's going to happen going forward.
Okay, fair point. Peter, do you think that perhaps the oil markets are overreacting to these statements that are coming in from various quarters?
I mean, that's an interesting point in itself. I'm going to Paris tomorrow to meet with the IEA, and then I'll be in Vienna on the 6th of December for the upcoming OPEC meeting. A couple of points. First off, we've got to put our mind also to the start of the year, the US dollar index, and what the appreciation has been to that US dollar. Have a look at what's happened as far as, and just a reality check as far as, the Indian rupee. In that period of time, it's been a very, very solid move to the upside. They're being paid in a stronger dollar. And there is going to be more concern, because I feel as though 18 was an incredibly volatile year. You put your mind back, October was a wake-up call. Leading in over the next couple of months, we've got an undecisive position there. Are we going to see further rate cuts coming into 19? What impact is the Fed going to play? Where do the stock markets go? Have a look at China. What's going on there? Energy prices crashing, stronger US dollar, trade issues with China from the president. And I think it's going to be a very, very fascinating year. This is not unusual. You put your mind back to, the late part of 07, 08. We're seeing a lot of similarities, and I think that it's going to be, strap yourself in. It's a wild ride, and many of the markets are going to do very, very strange things over the next 6 to 12 months. And I think it's just starting now, and we're going to see further impacts and further wake-up calls. It's a different world today. Cheap money is flooded, and now comes the next time how we play out of that particular market phase.
Well, it certainly has been a wild ride so far for crude markets. Gentlemen, I'll request you to stay on with us. We'll take an obligatory commercial break right here on the show, but come right back. We'll continue this analysis of the big crude reports.
Top of the world with Times Network. And you're watching ET Now.
He knows the market trends today and has mastered them over the last 15 years.
Bringing greed and fear and business analysis together, I think that's what day in, day out Nikunj does.
He tracks the biggest business stories that impact the growth of your wealth.
He forces you to come up with a specific recommendation and not just give general answers.
His keen market sense simplifies financial jargon to make you market ready.
Market opening without Nikunj Dalmia, A, is clearly unthinkable, and B, it will clearly be less enthusiastic.
He is most trusted by the bulls and bears alike. A name synonymous with Indian stock markets. Nikunj Dalmia, only on ET Now. She demystifies the global financial markets and their impact on India. She's the first choice of Wall Street's legends. She has a pulse on the biggest international fund managers. And she reports from the heart of the action. Tanveer Gill. Only on ET Now. She's one of India's most experienced stock market anchors. She tells you where to put your hard-earned money. She makes heads turn with her understanding of financial planning. She knows when the time is right. With her in-depth market knowledge, she sets the course for a confident financial future. Every morning, she's your guide as you get a fresh perspective on personal finance. Aisha Faridi, only on ET Now. They make your mornings profitable.
Good morning, you're watching The Market right here on ET Now.
They decode markets, money and more.
There is an absolute bloodbath in select mid-cap stock.
They have the combined experience of over 40 years.
How this impacts the emerging market world.
Start your day with the best market anchors.
Banking sector, not everything is good.
On The Market, every trading day, only on ET Now. Your dizzying lifestyle needs investment ideas at lightning speeds. Watch Market Fatafat. Get 30 big stock ideas.
Welcome back. We're analyzing the fall in crude prices and what's next. Is there more pain for the liquid gold? We have with us Peter McGuire as well as David Lennox. Peter, I'm going to ask you about the willingness of Saudi Arabia to actually go ahead and pander to the US request, because they are at this point of time in a very thin line. On one side, of course, they have the pressure to maintain their own economy's revenues via crude. I mean, they've already caused production to jump up almost 700,000 barrels per day in the recent couple of months. So what do you believe the Saudi would do come December? They have this very thin line of, maintaining prices on one hand, and at the same time, the economy's revenues. And they're not going to go for it alone. I mean, they'll need support even from Russia, which has their own fiscal considerations. So what do you believe come December? What are we looking at?
I don't think anyone really knows what prices will be come the best part of, the 10th or 11th of December. I don't think there'd be an analyst out there in the market that could actually pick what the market price will be. From where we sit, we think that there's going to be further softening leading up to that, to the meeting. Leading into Christmas, if you haven't got weather outages and don't have any geopolitical, wild cards in there, then I feel as though prices will probably, whipsaw a little bit, but oscillate between, for Brent, probably sub 60, maybe 59 to about 63, 64 would be, the price range. WTI, you could probably take $8 or $9 off that, and it'll give you the same sort of numbers. No one can really tell what Saudis are prepared to do, and the understanding as far as global growth and what the softening patterns are on the big picture from a demand side leading into the early phases of 19. So I think that it'll just be a little bit of a wait and see. Certainly they're pandering to the president, and also you've got to think, well, are they going to do something with the Saudi Aramco IPO? So there's many moving parts, and I think it's just a little bit of a wait and see prospect from a trading perspective.
what Saudi is going to do. No one even knows what Donald Trump is going to do, because in just these last 4 months, he's caused crude to spike to 86, and then again he's brought it down to 62. You know, so there's a lot of capriciousness on both sides. So then I must ask you, do you think that at this point of time, are we looking at like the kind of crash we witnessed in, you know, late 2015, early 2016? Do you think we may be looking at that sort of a fall?
I don't feel as though you're going to see anything massively sold off to that point. I feel as though OPEC wouldn't allow it, and I'm not necessarily thinking that the energy producers don't want it. Maybe consumers do, but I don't think the producers do. I feel as though, you know, you'll scrap a couple of dollars where it is at the moment to the downside, but who knows? I mean, who would have thought you had $150 or $147 odd in the early parts of July 2008. Within 13 weeks, it had crashed to around about $34, $35 a barrel. So not to say that markets don't fall and fall quickly, but I feel as though we haven't got that those same ingredients at the present to, you know, really capture a $35, $40 crude for WTI. I just feel as though it doesn't seem to have that. I think that I don't know, the mechanics at the moment really don't suggest that. Though who knows what can happen in January or February? You might see the Dow down 1,000, 2,000, 3,000 points. So yes, I think 19 will be volatile, but I don't know what the floor is going to be for crude.
Okay. David, I'll ask you then, where do you think, I know it's a tough question, you may be asked this several times, for brokerages as well, that answer has changed quite a bit, but where do you see crude headed in the short term, David?
Look, one would have to suggest that, yes, we've seen now a significant amount of bearish rhetoric coming out in terms of what's happening with, as you said, what's happening with demand, something that the market up until recent months had really not focused on. That's going to continue to drive, we think, the prices a little longer, primarily because, as I say, we've had opposing views coming out of OPEC and Russia regarding their production. So until we can get that sorted out with the December meeting with OPEC, if in fact that does sort it out, then the market's going to focus on the demand side. Obviously, the tariff wars have caused concerns from a growth point of view, and that's not going to change over the next couple of weeks, and the oil price may stay likely weak until we see that OPEC outcome.
Okay. Peter, I'll come to you. When it comes to the supply side, you know, I mean, US has been increasing their production, Russia has been increasing their production, Saudi too. So do you believe that all those fears with respect to supply being limited are all now behind us, and that firmly, regardless of whether the sanctions are imposed on Iran, whether Iran's exports actually come down to zero, we are not going to see a situation where actually crude is in shortage?
Well, I think that's right. You know, there's an overabundance as far as crude. You know, what happens if Venezuela gets back on track in 19? What happens, you know, the Libya situation? There's plenty of large producers out there that are currently underproducing that can actually increase their capacity. So I don't think that's an issue at the present time. The outlier is going to be if you see a major collapse in equity prices and confidence goes out of the market and the demand picture wanes. You're going to have excess capacity as far as crude, not less capacity, and that in turn could drive prices a lot lower. So, you know, they're the wild cards. I don't necessarily think that the Iran situation is anything too great or severe at the moment. And that, again, is a work in progress also. I'm not sure what the president's trying to achieve there. It seems to be those 8 jurisdictions or 7 states in Taiwan seem to still be able to take on board that crude. And I think it's just a little bit of a wait and see what impact it's going to have to the greater market.
Okay, fair enough. Just last comment from you. You know, nobody likes volatility in the oil markets. No country wants that. So do you see some interim measures? You know, I know the December meeting is just a couple of weeks away. Any interim measures to stem the fall in crude prices?
Well, maybe the producers don't like to see volatility. From a trading perspective, hedge funds and large traders and retail traders absolutely enjoy to see those large swings because it gives them opportunity. And whilst OPEC and the other oil producers like to see a price stabilisation. That certainly hasn't been evident over the last 30 trading sessions or approximate 30 trading sessions where the price has collapsed. So, you know, they can do so much, but they can't do everything. There are so many moving parts, futures trades, and, you know, all of the large, I suppose, market movers that are actively involved in these markets really can, you know, turn a market very, very quickly. And that's been evident over the last, you know, matter of a month or so. And I feel as though that volatility is not going to stop. We'll see large whipsaws. You might see it up $3 or $4 in a trading session, and then all of a sudden the next day you're down $4 or $5. So that's just the way it goes. It's a very, very wild time at the moment for traders. And if they're on the right side, it can be very, very profitable.
Well, yes, traders and you know, short-term investors certainly do love that sort of volatility. But on that note, gentlemen, thank you to both of you for joining in. David and Peter, both of you, I really appreciate you giving us your comments on this massive volatility and the massive drop witnessed in crude. Remember, it took us almost 8 months to head to $86 per barrel, but only about 40 days to slip once again back to $62 per barrel. But that's really the story of what's happening in crude markets all of this year. It's been a very tumultuous ride for the liquid gold.